Hello, everyone. Good evening. Good to be here again. We have another Bears and Bulls series for 2023, and I'm so excited to be here. Toby, how was your 2022, and how's your 2023 been?
Yes, so far so good. I mean, the years just started. Last year was interesting. I think it was, a good year on the whole. If you ask specifically in terms of investments or personal finance, I would say it was okay. I think there were some wins. Fixed income was definitely a good place for me with the high interest rates. And then I had some stocks that kind of made my portfolio look good. So I would say on the whole it was good. So MTNs and the likes of Fitson, they were good for me.
For you to have said MTN, that means you must have taken a cue from our recommendation last year.
Maybe.
Okay, good to have everyone here again. Thank you so much for taking our time from your busy schedule to join us. We appreciate you. Thank you again. So today we're going to be discussing about the topic harnessing value in the Nigerian exchange. We'll try as much as possible to communicate everything within the stipulated time. So please go along with us. We'll be moving a bit quickly, so please just try to understand the concept. And once we're done with this, you can just post your questions, and we'll make sure we'll answer them. Thank you. So today we'll basically be discussing about, like I mentioned earlier, harnessing value on the Nigerian exchange. Major things we'll be covering have to do with the global economy, the Nigerian economy, the Nigerian equities market, the market champs for 2022, then the drivers of the equities market for 2023, and the sectors and the stocks that you should watch. Now, I'll be starting with the global economy. I'm sure that in 2022, there's one thing we've been hearing, or one thing that we must have heard repeatedly, and that is inflation, and how inflation has increased, and how, that has affected everybody's wallets one way or the other. But let me just take you through, the backstory. Now, we had the Russian-Ukraine war hit in February, on the 24th of February. And due to that, we saw that the ripple effect affected crude oil prices. Crude oil prices shot up from $76 per barrel to as high as $127 per barrel. Also, the COVID-19 pandemic was still ravaging some parts of China. And as such, the demand from the Chinese economy, because now the Chinese economy is the second largest in terms of their demand for crude oil. And when we saw that some cities there were still under the lockdown, that hampered demand, and as such, price went up. So we saw that crude oil prices generally increased, and that affected energy prices and pushed up inflation. In response to that, central banks decided to hike interest rates because they believe that, if they hike interest rates, that would actually, slow down the rate of growth for inflation. And they did that. Most central banks did that globally. And we saw that happen. Even in Nigeria, we saw that happen. And as a result of that, we saw that global growth was impacted. Obviously, money became more expensive, unlike before, whereby some economies, their interest rate was quite low as 0%, between 0 and 0.25, especially for the US. Even for Nigeria, we know that the interest rate was around 11.5%, and that's shot up to about 16.5% during the year. So generally, last year we had those central themes. The Russian-Ukraine war, the COVID-19 that was impacting China, and high crude oil prices. For crude oil prices now, we know that crude oil basically is the lifeblood of the global economy. Whatever happens to crude oil prices most likely would, have a ripple effect on the overall economy. And I remember before now, around 2014, when crude oil prices started to decline, everybody was like, oh, and people were like, we want crude oil prices to go back up. I mean, it affects government's revenue, especially those governments or those economies that actually export crude oil. Now, we had a sharp increase in crude oil prices last year, and we had the sharp increase. I mean, obviously, due to the Russian-Ukraine war and the fact that, the Russian economy went through several levels of sanctions from, the different, went through different levels of sanctions. I mean, crude oil prices went to as high as $127 per barrel, like I mentioned earlier. And we can see that, from around June, prices started to decline and it dipped so low. I mean, it went back to almost the start of the year, and that affected, generally, we saw the ripple effect on different economies. For some economies, it actually helped because, the sharp increase that we saw, especially in inflation, started to, decline during the later part of the year. Now, the outlook for the global economy, what we think will happen this year in 2023 is that those central themes that happened in 2022 most likely, continue in 2023. However, there will be a mild twist. I mean, the Russian-Ukraine war is still there. The high elevated crude oil prices are still there. Inflation is still there. The high inflation is still there. However, for the Russian-Ukraine war, we really do not think that, there'll be a ceasefire anytime soon. However, we would see, support, affiliations, I mean, in terms of support for Russia and for Ukraine. I mean, for Russia now, we would see some of the BRIC nations support them. I mean, like China and India. They actually stated that they will still continue to buy crude from them despite what is happening. And for Ukraine, I mean, we expect to see the G7 group of countries and the NATO military alliance support them. But for crude oil prices, I mean, we expect crude oil prices to remain high in 2023. And why am I saying that? The lockdown, we envisage that, I mean, that has even happened already. The lockdown that we saw last year in China would most likely be lifted or has been lifted. I mean, sorry, it has been lifted. And once that happens, we'll see more demand coming from China. Remember, I said that the Chinese economy is the second largest in terms of their demand for crude oil. So, and once demand is high, obviously, the price too would also go up. And if we see the price going up, I mean, similar to what happened last year, inflation too might still remain elevated. However, we have the base effect such that, I mean, if the base year, that's the last year, if we had high inflation, then the inflation we'll see this year will most likely decline. But for most economies, I mean, inflation is way beyond their targets. I mean, even for the Nigerian economy too. Interest rates, we expect that, central banks globally would still, they might slow down, slow down on their rate hikes. However, I mean, the slowdown will be phased out. I mean, it will be in phases such that they won't slow down too quickly so that inflation doesn't rear its head, or high inflation doesn't rear its head again. Then a lot of economies, I mean, global economies are expecting, the recession to hit, obviously because of the high interest rates or the hike in interest rate last year. So we actually expect this to happen. Now, someone might say, oh, why are we looking at the global economy? But don't worry, you would understand shortly. Apart from that, that now we're more, the way the world works now, we're very connected. You can't really do anything in isolation. So whatever happens in the global economy, I mean, COVID has taught us, whatever happens in one country, you need to actually pay attention to it, because I mean, in just a matter of time, it might filter to your own economy. Now, the Nigerian economy. Last year wasn't really fantastic for us as a nation. I mean, inflation was as high as 21.5%. Our crude oil production declined to as low as 1.2 million barrels per day. And that's even inclusive of condensates. Interest rate was as high as 16.5. The exchange rate, I mean, Naira depreciated in all segments of the Forex markets and GDP growth rate. I mean, even though we're celebrating, the growth in GDP from 2021, I mean, we started to see that GDP growth rate started to decline last year. I mean, for obvious reasons. Outlook for the Nigerian economy. I mean, we know that the elephant in the room for 2023, I mean, has to do with the elections. And a lot of comments, questions have been hovering around that space. What would the outcome be like, and what policies and things like that. While that is really not the focus for today, but we believe the elections will have a major role to play on the Nigerian economy this year. Obviously, inflation, I mean, we still have elevated inflation levels, and we expect that, inflation might start to decline. It might not be at the same rate at which it increased, last year, but we expect that inflation would decline to an extent. We expect the CBN to continue to, adopt the hawkish stance. It might not be as aggressive as last year, but we expect inflation. We expect the interest rate now, we expect interest rates to still remain high, at least for most part of 2023. The exchange rate, the exchange rate is still a major, issue in the Nigerian economy. I mean, while we really do not expect the exchange rate to decline in terms of the exchange rate between the Naira and the USD, we think we'll see some form of stability. I mean, at least for now, towards the elections and after the elections. I mean, the outcome of the elections will most likely decide where or how the exchange rates will move going forward. Now, the myths. Now we're going to the myth of the matter, like the equities market. I mean, for me, this is my favorite part. Because of time, I'm going to move quickly. So please, just try to understand. The equities market in 2022 was very interesting. I remember when we had the first Bears and Bulls series last year. We're quite optimistic about the markets, despite a lot of comments about how a lot of people were saying they didn't expect the market to do quite well and all. But nevertheless, when we started the year, Boa Foods got listed on the Nigerian Exchange, and we saw additional listing of Airtel shares at the start of the year. That actually pushed the performance of the markets. Now, during the first half of the year, the market actually performed quite well. And that was also on the back of a rally in prices. A lot of investors were buying Airtel shares, Seplat shares, MTN. I mean, these are largely capitalized shares in the market. Now, also, some foreign investors were buying Airtel and Seplat, and that's because those stocks are dual listed, which means that they are listed on the Nigerian Exchange, and they're also listed on the London Stock Exchange. So some foreign investors were using those stocks to, repatriate their funds, leave our markets. So we saw a lot of demand for those stocks, and, because they are highly capitalized stocks, which means their value on the exchange is quite high. That actually pushed, market activities. However, during the second half of the year, when the CBN decided to hike interest rates, we started to see that, the market performance started to decline. Now, we know that there's an inverse relationship between high interest rates and the performance of the market, or the performance of the all-share index, such that if interest rates are high, investors will tend to move their funds from the equities market to the fixed income market. Why? Because it's safer, it's less volatile. I mean, the equities market, this chart alone is telling you a lot about the volatility of the market. Nevertheless, towards the last 2 months of the year, we saw that activity started to pick up again, and investors started to come back into the equities market despite the high interest rates. One might ask, okay, so why did they do that? I mean, obviously, that was because prices were low. Let me start with that. Prices were low. The companies listed on the exchange, their performances were good. And another thing, dividend yields were high in the market. So investors were calculating like, okay, if inflation is high, what markets would actually help me, beat inflation? in a short period of time, and that is the equities market. So we saw renewed interest, more people were buying shares, more people were taking positions in the market. And as such, the market went up, market picked up in November and December. Some people said, yeah, in December that Santa came early because a lot of people talk about the Santa Claus rally and all that. Anyway, let me move on. So for the sector performance, the oil and gas sector actually outperformed all other sectors in the markets. You can see here that the oil and gas sector did about 34%. And obviously that's not surprising. We know that we had high crude oil prices last year, and also the demand for petroleum products improved coming from, what happened in 2020 in terms of, COVID and all that. So we saw renewed interest in the market. At some point during the year, the performance of the oil and gas sector was at as high as 67%. Was that high? However, once crude oil prices started to decline, obviously the performance too was affected. The industrial goods sector also, did quite well. That was largely due to improved spending, in that sector, pre-election year. Then we also have the banking sector. The banking sector didn't do as well as a lot of us thought it would. And at least it didn't close in the negative, even though it's quite little. The insurance and the consumer goods sector, they closed in the negative. And that's because for the insurance sector, investors have actually had low apathy for that sector. And that's because from 2020, we've been hearing on the news that, a lot of companies, they are going to embark on the recapitalization exercise and restructuring. And we didn't see play out, like the way we expected. So there was actually low apathy for that sector. The consumer goods sector, it didn't do too well, obviously, for obvious reasons. We talked about inflation and how, obviously, consumers' wallets were pressured. Salaries didn't increase as fast as inflation did last year. So people were not buying as much. So we saw slow or low sales volume. For the telco actually did quite well last year. It was largely driven by the performance of Airtel. If you recall, I talked about how investors were buying Airtel. Not just for the value or for their good financial performance, but also the fact that they were using Airtel Africa to exit our markets. Now, this chart, the market performance, please don't let this chart confuse you. Don't let this chart. I've talked about the performance of the markets, which is the chart on the right. This just gives you, a numerical representation of the earlier charts that was shown. But now I really want us to narrow in our focus on this part, the foreign and domestic participation in 2022. Now, when it comes to investors' participation in our markets, that's the Nigerian equities market or the Nigerian Exchange. Before now, the market was largely driven by foreign investors. They come into our market, obviously, because their currency is stronger and they drive the markets. And during election years or pre-election years, they tend to leave. So our markets feels the impact of their departure. However, from 2019, when we had major foreign exchange issues, and the CBN didn't come up with policies to actually support that. We saw that the markets had been driven by domestic investors, which means that domestic participation has been overtaking foreign participation. Now, all throughout last year, domestic participation was on the high. All throughout. In foreign investors, like I mentioned, foreign investors have been leaving our markets. And also with the fact that, we had the Russian-Ukraine war, foreign investors were leaving emerging economies and repatriating their funds because, their central banks too were hiking interest rates. So this foreign and domestic participation is also key. At the end, you would understand. Now, the market charms for 2022, this based on market capitalization. Now, there's some stocks that did quite well in 2022, but we're choosing to stick to these ones. And that is because based on market capitalization, we tend to focus more on the top 15 most capitalized stocks. And that is because these stocks actually move the markets. So if anything is going to happen on the exchange, they will most likely happen between the top 15. So, I mean, it's also, that's also something we also need to look at, because those stocks actually, they have a large impact on the markets. Anyway, coming down to this, Airtel, like I mentioned earlier, had a return of 71% last year at the end of the year, Seplat 69%, Boa Foods and Boa Cement. I remember Boa Foods got listed last year in January. I mean, it still did 62%. So imagine if you just, place the bulk of your funds in all these stocks, you will have cashed out last year. I mean, out of the stock recommendations we put out last year, some of these companies were there. So please don't take a recommendation with a pinch of salt. I mean, actually, go out there and take positions. Now we'll be moving to the key likely drivers of the equities markets this year. Basically, we envisage that, like I mentioned earlier, the interest rates has a key role to play. I mean, if interest rates in the markets or the fixed income markets are high, we would see low participation in the equities markets. And that's because the equities markets is more volatile. And in terms of stability now, the fixed income market is somewhat is more stable than the equities market. So high interest rates would actually affect the performance of activities in the equities market. Then the corporate earnings for the year. Now the corporate earnings, which just means like the corporate performance, the results, companies' numbers, companies' financials in terms of their profits and assets and all that, was quite good in 2022. I mean, in quite a number of them, I mean, between 70 and 80%. Yeah, between 70 and 80% of the companies listed have done way better. I mean, during their third quarter results, they've done way better than what they even did for their full year for 2021, which just means that, I mean, during the third quarter of the year, if you've even done about between 80 to 90% of what you've done for the previous year, then obviously you've been doing quite well. So with strong corporate earnings, I mean, that would actually move activities in the market this year, because by the time companies release their result and we're seeing that, they've done remarkably well, that just means that they'll most likely pay higher dividends than what they did in 2021. So, I mean, there's nothing stopping us from taking position in them. Then new listings and capital market reforms. I mean, recall that I mentioned Boa Foods. Boa Foods was listed last year, and they also did I think 62%. So I mean, we need to pay attention to new listings on the exchange. Then capital market reforms. I mean, the Nigerian Exchange published a document saying that they're coming up with policy that would favor startups and fintech companies, to list on the exchange. I mean, once that happens, that would actually move, that would actually drive investors to take positions in those stocks, especially those ones that are doing quite well. As a matter of fact, we all know that Purple is going to be listing on the exchange this year in March. So I think we should also look out, for that. Then credible and fair elections, obviously. Once that happens, we believe that investors won't run and move their funds to safer havens, so they will most likely stay. There's another thing that I would like to mention, exchange rate policy. If the exchange rate policy is favorable, especially after the elections, whoever wins then decides to come up with a more favorable foreign exchange policy, especially for foreign investors will most likely come back to our markets. And you remember I said they left our markets in 2019, Q3 2019 specifically, and that's because of our exchange rate regime. It was not favorable to them. Most times when they come into our markets, by the time when it's time for them to repatriate or leave our markets, it's not at the same exchange rates that they've come into our market. So a lot of their profits was being eroded when they are moving back to their home country. The downside for this is the fact that, I mean, if you see higher interest rates, low dividend declaration due to one thing or the other, decline in crude oil prices, or increase in election-related violence, that would affect the performance of the markets this year. Now, down to the stocks that the sectors and the stocks to watch. Um, we believe that these 5 sectors are poised for growth in 2023. And, it's another opportunity for us to, take advantage of this market. I know that a lot of people talk about the fact that, oh, they've lost money in the market, can be volatile and all, but that's why you have people that's why you have people like us. We come up with these webinars periodically, and we recommend that you attend them, pay attention to them. From time to time, we make adjustments to our to our recommendations. And once you have this, we believe that to give you more understanding. Also, we push out publications periodically, daily, weekly, monthly. Once you have those ones, they will actually guide your investment decision. Anyway, coming back to this. Now, for the oil and gas sector, if you recall, we talked about how we believe that, activities in the crude oil space will pick up this year due to, the removal of the ban or the removal of the lockdown from China. We believe that, activities will pick up. So that's why we believe that the oil and gas sector will do quite well this year. And the companies that we recommend you look at closely are Total Energies and Seplat Energy. For the banking sector, we're looking at Zenith, Access, and UBA. The banking sector generally has, they have high dividend yields, which means that in terms of the yield and return, when you analyze it, they are much higher. The ones the banks pay, they're much higher than most other companies. For the telcos, first of all, the telcos actually, they got their payment service bank license last year, which means that it gives them the opportunity to operate like a bank. So you really do not have to, go through the normal banking system for you to perform transactions. We believe that would actually help their numbers. Also, they also got their 5G license last year. That's for MTN and Airtel. And also the fact that they're also working with the federal government for VAT collection. We believe that those things will actually boost their performance and their numbers, especially in this year. For the industrial goods sector, we have Dangote Cement and we have Lafarge. We believe that those 2 companies now would do quite well this year. For consumer goods, for the consumer goods sector, we have Nigerian Breweries, Nestle, and Okomo Oil. We believe that these companies are poised for growth too in 2023. Now, we've heard this. I don't think we should just hear this alone and move on with our lives. I think we should actually, take advantage of this move and start to position. That's why we have iInvest with us here. iInvest is our digital partner, very easy to use. And you know what? Let me not go into that. I think Tobi can do that.
Thanks, Seun. The presentation has been great. I've taken a few notes for myself already. And I think that you said a number of things during the course of your presentation that actually makes my life easier. If you go back, I hope you guys caught when Seun spoke to the fact that, when things are looking a little down in the equities market, there's the fixed income market. So, I would like to start talking about iInvest from that perspective, right? iInvest is a digital platform that allows you to basically manage your wealth on your own. The advantage of iInvest is that we have products in the fixed income space, and we also allow you to trade in equities. So it allows you to diversify your portfolio. It's an app that's available on your mobile device. You can access it on the web, and you can also use it on the go. So essentially, right, I think that a lot of what Seun has educated us on is something that we should definitely look into. One of the slides talked about the fact that the domestic market is on the increase. So I think that we shouldn't be left behind as individuals, right? And we should all try to participate. And iInvest is definitely a way that you can do that. It's simple and easy to use. You can download on the App Store or the Play Store. And once you get registered, you can get going. I mean, the advantage is that you don't have to go to anybody's office, fill out lots of paperwork. You can do it right from the comfort of your home, or whether you're, stuck in traffic. We all know the traffic today has been horrible. If you are lucky enough to have a driver, you can get going. So I would basically encourage everybody here to download the app, and let's take advantage of some of the tips that Seun has given to us. I've made notes of the likes of MTN, MB, and Zenith, and I think definitely I'll be participating. I think I want to be on the upside by the end of this year.
Thank you so much. Thank you so much, Tobi. Thank you. So now it's time for questions. Please, if you have questions, kindly put them on the. Okay, I'm so sorry. Okay, please, if you have questions, kindly post them. We would answer as much as we can while we can. And others, you can just send us an email or reach out to us, and we'll definitely respond. So I'm going to take some questions. Okay, I think this is for this is for Tobi.
Okay.
The person says, thank you. Tokwe says, thank you for the wonderful work the iInvest team has been doing. Okay, to invest with a securities company like yours is very scary. How do we know that a trader won't just withdraw your client's fund and run away with it? What protections, compliance guidelines do you have in place to ensure your clients are protected?
All right. Great question, Tobi. I completely understand where you're coming from, because obviously using a digital platform, you're not necessarily talking to somebody. You don't have somebody to hand to, strangle if in case there's anything that goes wrong. But what I can say is that iInvest is a platform that's been in existence for almost 5 years, right? And security and safety of every single customer is paramount to us, right? So first of all, our platform is highly secure. We are certified by ISO 27001, which is a global standard for security. So in terms of the fear around, somebody hacking the system, accessing your portfolio, I think that is next to none, right? Secondly, if you're buying securities on the iInvest platform, you are accessing the stock market directly. And there are intermediaries and registrars who hold the assets. Your stocks are purchased in your name, which is part of the reason why the KYC is quite stringent. So you would register. If you get onto the platform, you can register. We would take your KYC documentation. It will be reviewed and approved. And based on that, an account will be created for you with CSCS, right? And with that, even without iInvest, you can confirm that your instruments, your equities, your stocks that you have bought in the various institutions exist. And they exist in your name. So iInvest or no iInvest, your stocks are safe, just like any other stockbroker.
Thank you. Thank you so much for that, Tobi. I hope that answers the question, Tobi. Sorry, Tokwe. Now, Wale says that there's another question. Says, what's going to be listed in March? Oh, that's this Purple Real Estate. Yeah, Purple Real Estate will be listed in March this year. It's a real estate company. We can give you more information about that if you join our mailing list or if you send us a message. Is it possible to transfer my stock from my stockbroker to the iInvest app? That's from Candy. Stop.
Okay, should I take that one?
Yes, please.
Yes, it is. You would have to make the request via your current stockbroker, because they have to release the stocks to be transferred to our partner broker, which is Parthian Securities. But once it would require a little bit of paperwork, but once that's done, you can manage your portfolio on the iInvest app, and everything that any other investor can do, you would be able to do also.
Okay. Thank you. Kennedy says, how about Learn Africa? What can you say about their shares? Okay. For Learn Africa, I think the price is around 2 naira. Right now, I don't know too much about Learn Africa. I also know that their dividend yield is also quite good. I think it's around 9%. I can provide more information to you, Kennedy, if you drop your email or you just send us an email. We'll be able to provide more information about Learn Africa to you. It's not one of the stocks that we currently cover, but I mean, we can always do our research and give you that information. Another question says, do you margin trade in iInvest?
Currently at the moment, we don't.
Okay. I hope that answers your question, Adewale. This person says, will the recording be shared? Oh yeah, the recording will be on our YouTube channel. You can always go there and watch it again. This person says, oh, it's anonymous. Oh, fantastic. Thank you. It says, I've used iInvest for 5 years now, very secure, and the customer service is very responsive. Thank you.
Thank you. We hope we do more this year.
Okay, this other question too is also for you. Tobi, everybody likes you.
First half of the talking, now it's my turn, eh? Okay.
It says, what are the associated costs with the iInvest app in terms of capital gains, taxes, and admin costs?
Okay, so in terms of fees, when it comes to stocks, the fees are driven mainly by regulation. So the fees that apply to trading in stocks are pretty unified. There's a small commission that applies for trading, and this is applicable for across the industry. In terms of capital gains, I think that is personal, depending on how much you gain, and I mean, of course, we hope you gain a lot, but I think that's something that you would take care of with your personal tax consultant. But admin costs, we don't charge any admin fees. We just have the standard CSCS fees, the VAT that comes on that at 7.5%, the standard. I think there's some fees that go to the exchange as well. And then there's a 1.35% that goes to the broker.
Okay, thank you so much. This person says, you've talked about this again, but I think for emphasis, the person says, what benefit does your securities platform, give its investors?
Okay, yeah, as you said, I spoke to this, but just to emphasize and maybe put it a different way, it's basically a platform that you have on the go, right? You can trade during market hours, but you can also put in orders outside of market hours. So it means that, for example, let's say the stock market that closes at 2:30, but I didn't get around to put in my trade and I want to get in there first thing tomorrow morning. I can open up the iInvest app right now and place an order for 10 units of MTN. The beauty is that you can go in from anything from 100 naira, so you don't have to have big money. You can get in, I can choose to buy 100 naira worth today, another 100 naira tomorrow, and you get going. Your market, your order is sent directly to the market, and so long as there's a willing seller, your order will be fulfilled if you put in a buy transaction. And you can also monitor your portfolio on the go. So once you've bought, there's a page which tracks how your portfolio is faring, and you can put in a sell also at any time. So it's kind of a self-management tool, and it also allows you to diversify as well, like I previously mentioned.
Okay, thank you so much for that.
It looks like you have some admirers here too. Sean, you're looking good.
Someone said, Sean, you. Thank you so much, whoever it is. Thank you. Okay, let me. This question says, with the uncertainty around the elections, will it be best to wait till after the February election before getting involved in the market? February is just here. What is your best advice? So now, when it comes to things like this, we always like to ask, what is your investment objective? Do you have a plan? Do you have a goal? Do you intend to be in the market for the short term, the long term? I mean, these questions are actually important. Now, once you've decided that, or once you have that on paper, we can now tell you that, you know what, depending on the stocks that you want to buy, for some of them, this will be a good time for you to buy them. Why am I saying that? I mean, after February, a lot of people will want to come back into the market. I mean, given that right now, or given that for this period, interest rates are low in the fixed income market. So by that time, prices will have picked up and you might not be able to, I mean, get at the price that you want. And you know that, I mean, basic rule, I mean, if you get in at a low price, you want to sell at a high price. Or if you buy at a high price, then you sell at a higher price. So we always advise that, you know, your investment objective is actually paramount. Why are you actually going into the market? Are you just going in for dividends, or you're going there for capital appreciation? I mean, that actually is very important. Once you decide on those things, then yes, I mean, if you're going there for capital appreciation, we think that you should monitor the market and buy once the prices are low. If the prices are low now, then please take positions now, because what happens is that everybody always wants to rush in and rush out at the same time. And most times people don't really get the prices that they want. So, I mean, depending on your investment objectives, we'll recommend that you either buy now or you buy later. This person says that, this Kennedy, what are the fees for deposits and withdrawal? I think you've talked about that before.
On iInvest, currently we don't have any fees for deposits, which I could say is another advantage, because I know some platforms do charge a fee, and withdrawals also, we don't have any fees on that, aside the standard banking charges for transfer.
Okay, thank you so much for that. This person says that, can I invest on iInvest with pounds?
So currently we don't have pounds investments, but there are options to maybe bring in Naira, and then you can invest that way. We also do have a handful of dollar denominated products such as Euro bonds and USD fixed deposits.
Thank you. I mean, I think that's the one that's been getting a lot of people's attention. I mean, everywhere you go, oh, what investment do you have? What dollar product do you have? Okay, moving on to the next question. What's this? Okay, basically, Kennedy is asking if he can have access to the stocks. Oh yes, definitely. I mean, you just need to, if you signed up, if you registered for this webinar, we believe that we already have your email address. Nevertheless, I mean, you can still send us an email at research@parthiansecuritiesng.com, research@parthiansecuritiesng.com. I mean, if you send us an email, obviously someone would respond, and you automatically be added to the mailing list, and you'll get notifications when we have, when we, you know, put out our publications, or when we have recommendations. I'm just trying to take another question. Okay, this person says, good evening. How can one receive his dividend payments if purchased through iInvest? Because I have unclaimed dividend on my Zenith stock. In iInvest.
Okay, so because dividends are managed by registrars, unfortunately, we cannot manage that aspect for you. So we need you to fill out a dividend, e-dividend mandate form with a bank. If that is completed, you will begin to receive your dividends. However, if you do have any challenges, we are happy to help. So please contact us at inquiries@iinvestng.com, and we'll definitely assist to put you through to get your dividends in.
Thank you for that. So this person says, you left out GTB in your recommendations. Why? Okay, so I mean, before we put out these recommendations, there are certain criteria that needed to be met. One of them had to do with the numbers, the company numbers, and company numbers, the performance, then the potential upside. All the stocks that we mentioned or that were listed here, we believe that they will give you north of 15% at really good prices. But we did not really see GTB giving us that. That is GTCO, sorry, giving us that. That is why that is not on the list. And apart from that, the numbers haven't, the numbers haven't been quite impressive. The way GTB had performed, I mean, in time past. So that is another reason. But apart from that, I mean, we're also looking at the potential upside. That's not to say GTCO won't do well. It will, but I mean, in when we have the opportunity to put out information like this, we always try to look at those ones that have high upside, which means that I mean you have the potential to earn much more than others. I hope that answers your question. This other person says that you mentioned earlier that the foreign exchange policy and how FPIs are waiting for the elections. Okay, how much traction do you foresee if we have peaceful elections? Oh, that that would be a game changer. Peaceful elections would be fantastic. I mean, we're hoping for that. We really hope that that happens. And all, but more importantly, I think right now Nigeria is at a point whereby we are we are pressured on every side, and we know that the only thing that can actually help us grow in the long term is if we have policies that would actually, one, stimulate growth, and two, policies that would actually attract foreign investors into our market. So if we have peaceful elections, first of all, it tells the international market that we can do business. You can do business with Nigeria, and Nigeria is not, as in quotes, bad as a lot of people have been saying. Then I also believe that once that is in place, whoever is going to take over from the current administration, the FX, foreign exchange, is a major issue on the table. And I'm sure that policies are going to come up that would actually favor foreign, not just foreign portfolio investments now, we also favor foreign direct investments so that we would see more, dollars come into the economy. I mean, that is not to belittle the fact that, as a country, we also need to push things out there. We also need to export, because that's the only way you can earn, foreign currency. Or that's another good way, to earn foreign currency. I hope that answers your question, Nume. Okay, I think this question has been answered already. Do you charge a brokerage fee on the iInvest app? Do your investors get access to consultation with their brokers?
So, do we charge a brokerage fee? Yes, there's a brokerage fee, which is in industry standard. Do our investors get access to consultation? So firstly, it says with their brokers. So firstly, when you trade on iInvest, you're actually sending your trades directly to the market. So there's no broker involved. However, in terms of market information and insights, this is why we have Parthian Securities, and we engage in these types of sessions to provide you with information and tips and the likes. We also have, access to the mailing list and everything that Parthian Securities has to offer. And we tend to disseminate this information to iInvest customers as well.
Thank you.
That answers the question.
For me, the one of the things I like about the iInvest app is the fact that I get this push notification. And this actually notifies you of things that are happening in the market. So when I see something like that, all I'm just doing is, oh, okay. And I just, quickly make a move on the app and it's done with ease. So I think don't sleep on this. For those that haven't, I mean, please download the app. I mean, just have the app, follow, the instructions, the KYC, and you would see that funding your account and executing transactions. Please take it from me.
Yeah, and of course, the information that we pass on is the good stuff. We we are in contact with Seun quite often, so these tips we definitely will be passing them on.
Thank you. Okay, I just got the notification from our guys that we need to wrap up now. So there's still so many other questions here. So what we're going to do is that I'm going to ensure that we respond to everyone's questions. We'll respond to your questions. Right now we need to wrap up. Honestly, we are so grateful. Thank you for taking out time to be part of this session. Every other person that has sent a question, we will respond to you. Please, if you still have further questions, please send us an email. You can send us an email at research@parthiansecuritiesng.com. research@parthiansecuritiesng.com. Tobi, do you have an email that they can send your questions to?
Yeah, questions can be sent to inquiries at investng.com. And I think we'll put it in the chat as well.
Okay. Thank you so much. Thank you so much for that. Thank you all.
Thank you so much, Sean. It's been an awesome session, and thanks for all the questions. We're glad to have them, and we'll do our best to respond to each and every one.
Thank you.
Thank you.